Hi Fast Track Bio friends, as promised, this is a video where I hope to answer most of your questions about today's market. So let's begin. I labeled this under FAD, so before we go into the video, let's talk a little bit about some disclaimer, right? Do understand that this is a personal representation of information, while every reasonable care is provided to give you accuracy of the information. This is really for reference and educational purpose only, and by no means financial advice. Therefore, please remember to do your own due diligence. All right, so with that out of the way, what is FAD? FAD means fear, uncertainty, and doubt, right? So fear, what's fear? Fear of the Singapore core inflation hitting 13-year high, right? You have rising food prices. We have the fear that right now buying a resale property is so scary because the installment rates has increased tremendously over the past 1 year. The US market has been very volatile this year. It's entered the bear market and many people had lost money, and we're very uncertain moving forward, right? We also have the war that is still ongoing. It has not ceased as yet. And lastly, we also are still combating this virus that keeps mutating and now spreading, isn't it? And for uncertainty, we are concerned that moving forward, there is a high possibility of a recession coming in. Yep. And also the uncertain of what the Fed are going to do this year, and they kept promising to increase more of the rates hikes, right? And that is going to then affect all of us. Doubt. HDB resale prices has risen really high, right? A ground floor property in Yishun has sold for more than $1 million. It's just insane, isn't it? And then you have the overall private residential property index increasing by 3.2%, and today's release is actually at 3.5%. Yeah. Piccadilly Grand, if you read the news, they sold successfully on their launch week of 77% at $2,150 per square foot. You have HDB and condo rents rising for almost 2 years now. Yep. And another condominium, Live at MB, selling 75% on its launch week at an average of $2,387 per square foot. And then again, the latest GLS tendered out to these two developers, selling at all-time high. And I guess with all this information that hits you, you end up like this, right? All the FAD in the front, the back of your heads, and basically that's all over, and you just don't know what to do moving forward. Yeah? And if you're like this couple, for the first timers at least, this will be going in your minds, or at least you should be thinking about it. Is this the right time to enter the market? And if it's for your own stay, right, does it really matter? Or is there a better strategy? And for the HDB upgraders, those of you who have already fulfilled your 5 years MOP, you are presently sitting on so much profits and you are not so sure how you should move from here. And some of you, whereby you've already fully paid your HDB property, is it wise for you to take on more risk? Presently, your housing expense is so low, should you wait till the market cools before considering buying? Yep. And for my fast track property clients, all right, I know you guys are thinking it, right? You have made capital gains, but should you then wait and observe the market first? Won't you be selling high and buying high too, right? And which is the right strategy now? Should we go into the resale or BUC? And I hope that by the end of this video, I'm able to provide some insights to all these questions. So just to clarify, we are buying into real estate to build your family's wealth on solid foundation, and it should not be compared to stocks, unit trusts, your commodities, gold and silver, cryptocurrency, and your NFTs, right? Because they are all fundamentally different, yeah? So this is some courtesy of the company. They have done this chart, right? And from here, you're able to see the flow of events that leads up to the downs, the ups, right? And then the downs and the ups of the market, either due to global or domestic situations, right? You have the Asian financial crisis whereby there was a correction of 40% of the real estate market. and then you have the dot-com bust of 20%, and then it drops 24 or close to 25%. That was the last one, right? The subprime for US, and then you have the cooling measures, yeah? But it's important to take note that beyond 2013, the corrections of the price index was nothing like the past, right? You can see that during the July 2018 measures, it corrected at 0.7%, right? Here during the COVID time, it corrected 1%, and that's about it, yeah? So what is happening today? Today, we have a huge undersupply, all right? So why is that happening? There is a huge demand, right? Why is this happening? And then the rental market is just crazy, isn't it? Why is this happening, right? I just closed a deal in the past 2 days. It's a HDB 4-room flat in Tampines going for $3,300. All right, this is just insane, right? But people are willing to pay, and what's the reason behind it? Yep. So before we want to go into why is there a undersupply issue, let us now work and understand about the demand first. Why is the demand climbing, right? To me, at least, I think it's because of social media, right? The way for education and outreach to a vast number of audience has tremendously changed over the past 15 years. People are able to get information and education in an instant, and at the same time, they also realize what opportunities they have been missing out, what mistakes they have been making, and how they are able to improve and change moving forward. All right. Cooling measures is another one. The cooling measures, they have indeed fulfilled their objective, right? And that is to keep the market from inflating too fast too soon. But yet at the same time, it has also caused many couples who have always looked to own multiple properties, or at least 2 properties in their lifetime, to either decouple where possible and move into the private market, right? And this has caused a huge surge in demand because unlike in the past where we could hold on to our HDB and wait while saving up perhaps 10 or 15 years in the future, there was no hurry to get moving. But today is a bit different, right? Because you have no choice but to sell your HDB to move on because you have 2 names inside, isn't it? Yep. Next would be the number of high MOP units. For this year, right, you can see that we have one of the highest numbers of families that are going to meet their 5-year MOP this year, 31,000 families. And these families will be sitting on their first pot of gold and wondering how to repeat this process. And if there was ever a thought for them to own a second property, like I said earlier, they will need to sell off their first because in the past, many of them were not educated at least that they could buy a BTO under 1 name, and most purchase under 2 names. Yeah? And they're not able to decouple anymore. Yeah? And also because there is no deferred payment if they sell and they purchase. Yep. And with the cooling measures, a lot of these local families, they have no choice but to compete for rental units with our foreign friends. And that's the reason why nowadays there are more families renting, and has caused a surge in the rental market. Next, we have another group that has fulfilled their MOP, and that will be your EC upgraders, right? These are the 7 ECs that have made the MOP this year, 5 years already, right? All right, and these numbers are also going to form part of the demand, but unlike their HDB counterparts, these families are able to decouple from their ECs, right? Withdraw part of their capital appreciation and purchase another unit. Now, what about supply? Apart from all that you have heard, the delay in construction, disruptions to supply lines, so on and so forth, right? This is what I came up with. Individuals with more than 2 properties. Again, it is also because of the cooling measures. These people who have more than 2 properties would have in the past flipped them for profits, and inventories could have been recycled. But today, if you own more than 2 properties, the chances of you selling the property is going to be very low because it's be very costly to purchase your third or fourth one, isn't it? Right? So what they have done is they have actually pulled out all the inventories out of the market. Yeah? And individuals with one property, with the present market conditions and other reasons that I'll mention later, these individuals know that their next purchase is going to be more costly, right? And with that in mind, do you think they will be likely sell their property at market price or at a premium? Too few GLS, right? This actually would mean that for the last transactions here, last tender for Pine Grove and Diamond Road, right, it led to greater competition amongst developers. And you can see that here, for these two plots of land, their land cost is at 1,318 and 1,350 per square feet per plot ratio. And it results with a possible sale price a year from now at between 2,350 to 2,550 for these areas. So you could be thinking, so what? My friends say recession is coming and market is going to crash 20%, right? Recession is such a big word and I think everyone is saying it, right? But let me break it down to what I think makes sense, at least for all of you to consider. But at the meantime, I think I'm emitting too much negativity, so here is a video to pump in some positivity to all of you.
Charlotte always flip, ayo. Look, he put on the nose.
Alright, better now? Let's get back to it. So I'll be looking at these periods of decline from 1997 to 1998 and then 2008 to 2009 and then from 2014 to 2017, alright? So this would be the Asian financial crisis, the Great Financial Crisis, and then I call this the Singapore cooling measures, alright? I'm going to look at these two periods together from Asian financial crisis and the Great Financial Crisis. Yeah. So basically, this chart shows you the total deposits in Singapore. Basically, it's like a gauge to how much we are saving versus spending and how much liquidity we have. And during these trying times when most of the world is combating their domestic issues, Singapore, as you can see, also experienced a dip in deposits, right? Here and here, which seems to suggest that we were at the time spending more than we are saving. And if you were to map that with our overall unemployment rate, it does tell you the reason why. There was an increase of unemployment from 1998 to 1999, right? From 1.4 to 2.5 and 2.8. Below here, it tells you the number of people that were unemployed. And then again, from 08 to 09, there was a jump from 2.2% to 3.0%. And basically, there was an increase, there was a stagnation actually from here. The highest unemployment rate was in 2003. Here it stagnated all the way, right? Until it improved in 2007, the unemployment rate dropped, and so did the increase in deposits. Yep. Now, what about in the years 2014 to 2017, the Singapore cooling measures, right? So, where property prices fell 11.6% over 15 quarters. Now, during this period, I don't believe there was any exceptional events globally that contributed to the price falling. I believe it was more policies driven. So during this time again, you could see that deposits were kind of flat and hovering around 820 million, right? Okay, and if you look at the unemployment rate, actually it was very steady from 1.9 to 2.2%, right? It was in a very healthy range. So in the beginning of the year, I was anticipating a correction because this data does shows that domestic interventions does make a huge change, right? And therefore, when the cooling measures was announced in December 2021, the one that sticks out was the revision of the TDSR from 60% to 55%. And I was proven right. a knee-jerk reaction, first quarter 2022, the PPI only increased by 0.7% until I was proven wrong, when flash estimates for second quarter reflected a sharp increase of 3.2%. And I started to ask myself, why? And I came to a conclusion. Before 2013, right, this is a property investor, many could buy and own multiple properties, especially during the time when there was 90% financing. It was a time where you borrow from the banks was easy, not much checks on your debts, and repeated loans of the same category. Meaning, as long as anyone had a down payment, they could own 5 to 10 properties, yeah? But when a crisis such as a great financial crisis hit us, right, and the PPI dropped by almost 25%, so did the rentals. And therefore, if every unit rental drops by $500, I will be unable to meet my monthly mortgage payments, and that's just one of me, right? When you multiply that, plus in an environment of increasingly unemployment, right, you have a high supply and low demand situation. Yep. So what happens is that we will all start to flood the market with inventories, isn't it? Yep. So I classify this type of property owners as a one-star owner. Okay. Yep. But for the past 7 years, a new breed of property owners has emerged. Their household debt are in a comfortable range, thanks to the TDSR. We can laugh and mock at the people who paid ABSD for their second or third property, isn't it? But those buyers, they really can. Yeah? Not only are they able to pay the ABSD upfront, they also take on a lower LTV for the second or third mortgage. And this can only mean that these buyers, through their lifestyles and spending habits, have a formula to generate such massive amount of cash for them to make these purchases. So you can just imagine just how much holding power all of these property owners have, right? And during this period when they bought, right? So I'll classify these property owners as a 3-star owner, okay? And now come 2022. Ever since the new measures announced in December 2021, once again, a brand new breed of property buyers have emerged, this time around with an even higher holding power. They are your 4-star owners, right? So we are in a situation where anyone or any family who managed to ride out the last financial crisis got out even wealthier, as they were the ones with the real holding power and good financial habits. Mixed with now the 3 and 4-star property owners, effectively these mini crises over the past years and the domestic government interventions have erased off all the substandard property buyers and replaced them with a brand new breed of property owners with low debt and high holding power. So if you are looking to get hold of a desperate seller, I think it's pretty tough because they can really hold. Yeah, you need to find one with domestic issues. Okay. So I looked further, and as you can see, this is a Singapore deposit rates again, right? We are standing now in excess of 1.2 billion, and we really have a lot of money. Yep. And then I look at the unemployment rate, because it's one of the most important things to look at, right? If you have no jobs, you can't spend, isn't it? And you can see that now we are again at one of our lowest unemployment percentage, correct? Therefore, I don't foresee a drastic fall in property prices in the short term unless a few things happens. Unemployment rate increases, massive retrenchments, MNCs starts pulling out their HQ from Singapore, right? But there could be a possibility of a small correction if one or two of the cooling measures are readjusted. Right? A further decrease in our TDSR combining with the increase of the interest for loan assessment. So what do I mean? Effectively, if this happens, not only do we have our loan size reduced if TDSR drops by another 5% to 50%, adding on the increase of loan assessment from 3.5% to a possible 4.5 or 5%. This will really erode our purchasing power. But again, this is just going to give birth to another elite class of property owners. 5 stars, isn't it? In the short term, if this does happen, we may experience another knee-jerk reaction. But will the property price correct by a huge percentage? Personally, I doubt it. I'm more inclined to believe that owners who have been priced out of their next purchase will pull out from the market, leading to a further decrease in inventories. And buyers who continue to delay their purchase will find themselves further priced out of their ideal homes and possibly settling for a wrong property just because they can afford it. So as you discuss your property plans and strategies, do take into consideration what the future looks like for property prices in the longer term. Okay? And then spotting the right property and not timing the market. As the saying goes, do not wait to buy real estate. Instead, buy real estate and wait. Thank you all for taking time to watch this video. Good luck to all of you and happy hunting.